What exactly does this mean for consumers? I mean, the whole process for, when you get a mortgage through Quicken is electronic, and now
Yeah.
you can actually close electronically. So you don't really have to hire a lawyer. You don't have to interact with anybody. It's all pushing buttons.
Well, with Rocket Mortgage, the complete application process was electronic, but still at closing, up until a few months ago, you were doing some paper signing, and now we've got e-closing. So that means that you can electronically sign your closing. It keeps things organized. As everybody knows, you get, hundreds of documents, but more importantly, it gives us flexibility. So, for example, let's say you were in the Army and you were serving overseas. You would be able to sign electronically, remotely, without having to have a printer and print that documentation and notary and those sorts of things.
Does it save on closing costs?
It certainly can help. Yeah, as we bring in efficiencies, all that gets passed along to the consumer.
By how much, approximately, on average?
I don't think we've gotten to that place yet. I think about 95% of all closings here in the country have been conducted by Quicken Loans and Rocket Mortgage. So we're still working through the system and figuring out. And the big win for our clients is the flexibility. If you're purchasing a home and a date changes and you need to close in 2 or 3 hours, all of a sudden we can upload those documents and get that closed for you. So it's really a very focused on a convenience play at this point in time. But like I said, when you do that, eventually the economics trickle through as well.
Second quarter for Quicken Loans, best ever, $32 billion in closed loan volume. Third quarter is tracking to be what?
Even more. We'll have our best quarter ever, approaching $40 billion in closed loan volume, and applications are continuing to increase. So it's been a great year here at Quicken Loans, and I was listening to the earlier commentary. It's interesting to watch the perspective on interest rates when we see, from our end, we see a lot of real positive indicators for the economy.
When you see interest rates go down, when you see, for instance, the 10-year yield go to 1.5, plus percent or so, how much do mortgage rates tend to come down? And at what point do you say, you know what, we're at a point now where customers are going to come flooding back in to look at refinancings or even purchases?
Well, as you know, most of our clients are focused on a 30-year fixed-rate mortgage, so it's a bit different, but it's related. And really where we are today is probably where we see a lot of client interest. I don't see interest rates changing significantly from this point, and they don't have to make sense. I'd say most of the folks out there today should think about getting a refinance because these rates are now at historic lows. And in fact, we're actually seeing the purchase market pick up. September was a very, very strong month for us from a purchase perspective, and I think interest rates help that as well.
When you take a look at how many people had already refinanced, Jay, I mean, there is an argument to be made that people who have refinanced, they've refinanced, and rates would have to go substantially lower for them to make it worth their while, worth the cost of closing, et cetera, to actually refinance once again. Have we reached that point?
No, when you think about the American and the thing that they're going through in life between, paying for college for their children, remodeling their home, moving to a new home. Although people secure low interest rates and have been doing that for quite some time, there are so many changes that occur. We're talking to clients who are thinking about their overall financial picture and leveraging low mortgage rates to benefit it. So in all my years now, almost a quarter century of doing this, I've never seen a situation where we just get to an end where there's no benefit left. And with rates this low, even people who took advantage of great rates years ago are now doing it again.
What are you seeing in the housing market, Jay?
I mean, we feel strong about the housing market. My personal opinion is I think the Fed should be thinking twice before entertaining another rate cut. I know that purchases typically lag some of the other indicators, but like I mentioned, September for us, purchase applications were great. And so, the housing market seems very, very strong. We're noticing that our home value, as we measure by appraisal, is still coming in a tad bit higher than how consumers perceive the perspective of the value of their home. So that's a good indicator. So, all things are firing on all cylinders right now from our viewpoint.
Are you seeing any issues in particular states, particularly the high tax states, the ones on the East Coast, ones on the West Coast?
Yeah, last time I was on, I got the same question. And no, we haven't seen that at this point in time. I think you referenced unemployment or lack of unemployment. And so, watching that at some point in time, it affects the employer, and that can trickle down. And that is something that we're keeping a close eye on. But we've seen no effect really from taxes as it affects home ownership.
Do you think mortgage rates are going to go lower? And I asked you that because if it's a coin toss, Jay, there's some thought that if mortgage rates look like they're going to climb, it could incent people to come off the sidelines. But if the answer that you give me is maybe they'll go lower, I would think that would sort of remove the pressure from people to actually make a move.
You know, this is the way I always think about it. There is no harm in exploring your opportunities and in taking advantage of a low interest rate. In today's mortgage market, there are no prepayment penalties. You reference cost, but in many cases there are low or no cost options. And so we don't know what the interest rates will do. They could go up, they could go down. But if it makes sense, you should lock in today, get your low interest rate, and then if by chance they drop another half point in the next 90, 126 months, well, you can always refinance again. So, you know, for me, I like to play the safe bet. And if that means saving money right now, then now's the time to do it. Just
curious, Jay, do you have a mortgage yourself? And what rate is it?
Well, that is a great question, and I'm an adjustable rate type individual.
Okay.
So, but I'm in the business, so I have some more comfort, I suppose, in how those mortgage programs work than others.
What kind of rate do you have?
Well, something lower than we've got today, but I'm still looking and seeing what's out there right now to see if there's an opportunity to take advantage of the housing market. Quite honestly, not just interest rates, but real estate, and I'm watching the real estate market very closely as well.